A Brisbane bartender just bought a $9,800 motorcycle with Bitcoin and paid exactly $0 in tax. Completely legally. Using a rule that's been in Australian tax law for years. Meanwhile, his mate sold the same amount of Bitcoin on an exchange and got hit with a $2,400 tax bill. The difference? 6 words hidden in plain sight. Personal use asset exemption for cryptocurrency. Right now, thousands of Australians are overpaying tax on crypto transactions because nobody's talking about one of the most powerful exemptions in Australian crypto tax law. If you've ever wanted to use crypto to buy something, a car, a holiday, electronics, anything, without triggering capital gains tax, this video will show you exactly how to do it. Legally, using the ATO's own rules. And I'm going to prove it with actual examples pulled straight from the ATO's official guidance, including the exact scenarios where it works, and the critical mistakes that will disqualify you instantly. Let me show you something most people don't know exists. In Australia, if you use cryptocurrency as a personal use asset, meaning you buy it specifically to purchase something for personal use, and the acquisition cost was under $10,000, any capital gain is completely CGT exempt. This isn't a loophole. This isn't tax avoidance. This is official ATO policy, clearly stated on their website. Here's the exact wording from the ATO. A capital gain on the disposal of a crypto asset is exempt from CGT if it is a personal use asset and you acquire it for less than $10,000. But here's what makes this powerful, and what most people miss. The exemption isn't based solely on what you buy. It's based on how you held and used the crypto from acquisition to disposal. The ATO determines this at the time of disposal by looking at how quickly you used the crypto after buying it, what your overall pattern of crypto behavior is, whether you can demonstrate personal use intention. Think about it this way. You buy $8,000 worth of Bitcoin specifically to purchase a motorcycle. That Bitcoin increases to $16,000 by the time you make the purchase. If you sold it on an exchange, that's an $8,000 capital gain. You owe tax, potentially well over $800 and $3,600 depending on your tax bracket. If you use it directly to buy that $16,000 motorcycle from a dealer accepting crypto, personal use asset. 0 tax. Same gain. Same amount. Completely different tax outcome. But, and this is crucial, you need to get the details right. Let me show you the exact examples the ATO provides on their official website. These aren't my interpretations, these are their scenarios. Example 1, Michael's concert, qualifies. Michael wants to attend a concert. The concert provider offers tickets with a discount for payments made in crypto. Michael pays $270 to buy crypto assets, which he then uses to pay for the tickets on the same day. ATO's verdict, this is a personal use asset. Why? Because Michael acquired and used the crypto in a short period to buy a personal item. Even if that $270 increased in value before he bought the tickets, the gain is tax-free. Example 2. Peter's investment does not qualify. Peter has been regularly keeping crypto assets with the intention of selling at a favorable exchange rate. After some time, he decides to buy some goods and services directly with some of his crypto assets. ATO's verdict, this is not a personal use asset. Why? Because Peter held the crypto primarily as an investment. The fact that he eventually used some for personal purchases doesn't change the nature of the asset. This is the critical distinction. The ATO looks at your overall behavior and primary intention. Here's what this means in practice. More likely to qualify. Buy crypto specifically for a purchase. Use it quickly. Clear personal use pattern. Won't qualify. Hold crypto as investment for months. Occasionally spend some. Investment pattern dominates. Now let's talk about this $10,000 limit, because this is where people get confused, and where you need to be careful. The $10,000 limit refers to the acquisition cost of the crypto, not the value when you spend it. Scenario 1. You buy $9,000 of Bitcoin. It grows to $18,000. You buy an $18,000 motorbike. Result. Potentially tax-free if other criteria met. The acquisition was under $10,000. Scenario 2. You buy $15,000 of Bitcoin. It grows to $30,000. You buy a $30,000 car. Result not exempt. The acquisition exceeded $10,000. Even if it qualifies as personal use, you still owe tax on the gain. Scenario 3. You buy $5,000 of Ethereum on Monday, another $5,000 on Wednesday. Each grows to $10,000. You use both, $20,000 total, to buy a boat. Result, potentially tax-free. Each separate acquisition was under $10,000. Important caveat. While the ATO hasn't explicitly prohibited splitting acquisitions, you need to ensure each purchase is genuine and has a legitimate purpose. If you're clearly structuring transactions artificially just to stay under $10,000, the ATO may view this as an artificial arrangement. Best practice. If you're planning a large purchase and want to use this exemption, space out your acquisitions naturally over time, days or weeks, and document your intention for each purchase. Here's where most people unknowingly disqualify themselves. The ATO has made it clear timing matters enormously. From the ATO's official guidance, a crypto asset you acquire and use in a short period of time to buy items for personal use is more likely to be a personal use asset. A crypto asset you acquire and hold for some time before you use it is less likely to be a personal use asset. Risk assessment timeline. Same day to 1 week. Strong case for personal use. 4 weeks. Good case if documented 1 to 3 months. Weaker case, needs strong documentation, plus months. Very difficult to defend, plus year. Almost impossible unless exceptional circumstances. Here's the strategy for documentation. When you acquire the crypto, create contemporaneous evidence of your intention. Email yourself. Purchased $8,000 of BTC today to buy a new laptop once I research the best model. Screenshot it with the date visible. Save the exchange receipt showing the purchase. Keep any research about the item you're planning to buy. If you end up holding for longer than expected, document why. Waiting for product release. Waiting for merchant to restock. Saving for additional items to buy together. The key principle. You need to prove your intention was always personal use, not that you changed your mind later. Let's get specific about what actually qualifies under this exemption. Qualifying personal use. Purchases. Electronics. Phones, laptops, TVs, gaming consoles. Vehicles. Cars, motorcycles, boats, if for personal use, not business. Travel. Flights, hotels, experiences, tours. Entertainment. Concert tickets, event access, streaming services. Furniture and home goods. Clothing and jewelry, for personal enjoyment, not investment. Dining and experiences. Personal subscriptions. What doesn't qualify? Holding crypto as an investment. Trading one crypto for another. Staking crypto to earn rewards. Buying business-related items. Buying items to resell. Buying investment assets. Shares, investment property, gold bars. Converting to AUD first, then buying. This is critical. Critical exclusion. Payment gateways. From the ATO website. Except in rare situations, a crypto asset is not a personal use asset if you use a payment gateway or bill payment intermediary. This means the exemption generally doesn't apply if you use BitPay Coinbase, Commerce, PayPal Crypto Checkout, Apple Pay funded with crypto, gift cards purchased with crypto, prepaid debit cards topped up with crypto. Why? Because you're not actually buying the item with crypto. The intermediary converts it to fiat and buys on your behalf. What does work? Direct merchant acceptance of crypto. Peer-to-peer purchases, where seller accepts crypto directly. Merchants with direct crypto payment integration, not through third-party processors. Now you might be thinking, this is great in theory, but where can I actually spend crypto directly in Australia? The honest answer, it's more limited than most crypto enthusiasts want to admit. Direct crypto acceptance qualifies for exemption. Some car dealerships, growing, especially for luxury vehicles. Some property agents, rare but happening. individual merchants and cafes in crypto-friendly areas, peer-to-peer marketplace transactions, some online retailers with direct crypto integration through payment processors, generally doesn't qualify. Most travel booking sites, most online retailers, most gift card platforms, most payment apps. Here's the reality check. This exemption is most useful for large P2P purchases, buying a car or motorcycle from a private seller who accepts crypto, direct merchant purchases, electronics, goods from shops that accept crypto natively, forward planning, knowing you'll make a large purchase and structuring accordingly. It's less useful for everyday spending because most merchants use payment processors that disqualify the exemption. Pro tip: if you're planning a large purchase, vehicle, electronics, travel, ask the merchant how they accept crypto payments. If they use a direct wallet-to-wallet transfer, you're golden. If they say we use BitPay or similar, it won't qualify for the exemption. If you want to claim this exemption confidently, you must document everything. The ATO has data matching programs with crypto exchanges. They will know about your transactions. Your complete documentation checklist. 1. Acquisition evidence, exchange, purchase receipt, showing amount under $10,000, bank statement showing the fiat transfer, date and timestamp of crypto purchase, record of AUD value at time of acquisition. 2. Intention, evidence, contemporaneous, note/email, stating purchase intention, screenshots of items you were researching/planning to buy, any correspondence with merchants about crypto payments, disposal, evidence, blockchain transaction showing payment to merchant transaction ID and date, record of AUD value at time of use, invoice receipt from merchant, showing crypto payment. Personal use. Evidence proof that item was for personal use, not business evidence. It's not held for resale. Photos, delivery confirmations, etc. 5. Timing documentation. Clear timeline from acquisition to use. If held longer, explanation of why, product delay, waiting for sale, etc. Store all of this for a minimum of 5 years. The ATO can audit you, and you'll need to demonstrate you met all criteria. Pro tip: create a folder for each transaction. Label it clearly: personal use asset, item to date. Keep everything in one place. Let me show you the mistakes I see people make that immediately blow up their personal use asset claim. Mistake number 1, the selective memory approach, claiming capital losses on some crypto trades while claiming personal use exemption on gains from the same portfolio. ATO's view: if you're treating crypto as an investment generally, you can't cherry-pick personal use treatment for profitable disposals. Mistake number 2, the payment gateway trap using BitPay, gift cards, or prepaid cards, thinking the exemption still applies. Reality: the ATO has explicitly excluded these methods. The merchant must accept crypto directly. Mistake number 3, the retroactive intention, getting audited and trying to claim, "Oh yeah, I always intended that for personal use," without any documentation. Reality: the ATO expects contemporaneous evidence. Document your intention when you buy, not when they audit you. Mistake number 4, the over $10,000 split buying $15,000 of crypto in one transaction, then trying to claim only $9,999 of it was for personal use. Reality: the $10,000 limit is per acquisition transaction, not how much you choose to use. If you acquired over $10,000 in a single transaction, none of it qualifies. Mistake number 5, the investment portfolio conversion. Holding crypto in your investment portfolio for months, then suddenly deciding to use some for personal purchases. Reality: the ATO looks at your overall pattern. If you're clearly an investor, occasional personal use doesn't change the classification. Look, this exemption is real, it's powerful, and it's one of the few genuine tax advantages for crypto in Australia. But it only works if you do it correctly and honestly. Your action plan. Step 1. Identify upcoming legitimate personal purchases where you can find merchants accepting crypto directly, not through payment processors. Step 2. Buy crypto specifically for that purchase, ensuring each acquisition is under 10,000. Step 3. Document your intention immediately. Email yourself. Screenshot the item. Save evidence. Step 4. Make the purchase within 30 days maximum, ideally within days. Step 5. Keep comprehensive records for 5 years minimum. Step 6. Don't mix this strategy with your investment portfolio. Keep personal use transactions separate. Final warning, this isn't about gaming the system. It's about using a legitimate exemption for its intended purpose, encouraging crypto use for actual commerce, not speculation. If you're trying to force your investment gains into this exemption, you're taking a significant risk. The ATO is sophisticated, and the penalties for getting it wrong far exceed any tax you'd save. When in doubt, consult a crypto tax specialist. The cost of professional advice is far less than the cost of getting it wrong. If you found this valuable, subscribe for more deep dives into Australian crypto tax strategy. Next video, how the ATO actually catches crypto tax avoidance, the data matching program explained. This is Taxoshi. In crypto tax, knowledge is literally money. See you in the next one.